On a Saturday, China's finance ministry held a briefing. The highly anticipated event was another disappointment for markets. Instead of specific numbers and new announcements to bolster consumption, policymakers delivered the same vigor, hints, and general promises to support the domestic economy. And today, the US celebrates Columbus Day, so the reaction to the dollar and other major currencies to China's news may be muted. In the meantime, economic news and data are benefiting the US currency. The US dollar has already closed with the gains for 2 weeks straight, and today its index, which tracks the greenback's performance against a basket of 6 major currencies, is trading quietly in the daily range of 102.90 to 103.10. Everything suggests that the US dollar is set to dominate the market. The fact is that factory inflation in the US has slowed down significantly less than expected. Besides, employment in the US private sector grew in September beyond all expectations. It's now clear that the US Central Bank will no longer cut the refinancing rate by 50 basis points. At best, we can expect 2 rate cuts of 25 basis points each by the year end. And today, due to the thin market on the long weekend in the US, the dollar and its currency pairs will likely trade sideways. The US dollar has clearly exhausted its bullish momentum, so a correction is around the corner. At the same time, the resilience of the US economy compared to the Eurozone has placed the euro at a disadvantage against the dollar, and this situation is expected to persist in the coming months. Indeed, the single European currency is wound down by the dovish policy of the ECB. The regulator is widely expected to deliver 2 more rate cuts by the year end. Under such fundamentals, the euro-dollar pair broke out important support at 1.0940 and is likely to hold below the landmark level of 1.0950. Thus, the instrument is expected to trade lower within a daily range of 1.0919 to 1.0941. Meanwhile, the US dollar is in favor with investors as a safe haven asset on the back of escalating geopolitical tensions in the Middle East and the conflicts between China and Taiwan. The gold price is also rising for the third day in a row, and today's it recorded new weekly highs, trading in the range of $2,660 to $2,684 per 3 ounce. The safe haven asset is expected to continue its rally. The combination of the economic and political factors also contributes to the rise of oil prices. Moreover, these factors are likely to persist with the risk of a de-escalation. However, due to the holiday in the US today, the market will continue to consolidate in the range of $77.10 to $78.60 per barrel. Although oil prices dipped slightly on Friday, this seemed to like a local pullback relative to the previous bullish phase. Overall, the oil market has been consolidating. The benchmark Brent crude is halting just below $80 per barrel, which it has yet to overcome. Interestingly, Brent notched this high almost in one go, rebounding off $70 per barrel. Therefore, nothing is surprising about the current pose. The market first needs to adapt to the existing conditions and fundamentals. A new bullish phase is possible only after that. As for the Russian currency, it showed signs of a potential correction on Friday, albeit a very modest one. The ruble has some preconditions for a slight strengthening, which may begin today. Although the US Treasury's ban on all transactions with a Moscow exchange has come into full effect, trading in yuan is expected to continue as usual, according to informed sources. Additionally, the Bank of Russia stated that the regulator was ready to take all necessary measures for the urgent transition of the market to interbank trading. So, the news, accompanied by rising oil prices, has created a positive backdrop for the Russian currency. To sum up, even if the US steps up pressure on China, forcing its central bank to suspend yuan trading on the Moscow exchange, nothing catastrophic will happen. The market will adjust quickly. That's all for today. We monitor developments in the financial markets. Subscribe to our channel and stay up to date with the latest news with us. So see you soon.